Hello and welcome. Here, we take stacks of information and pull out the most important bits of knowledge and insight just for you. I'm Amy.
And I'm Tom. Today, yeah, we're diving into some pretty interesting waters in the financial markets.
Definitely. Our mission today is to figure out if investors are genuinely shrugging off these escalating tariffs. It's a bit confusing given the headlines.
Right.
We're using the daily financial digest from Exant, dated July 11th, 2025, to try and get to the bottom of it.
Yeah, we'll be looking at, how the big indices are doing, what's happening sector-wise, and then the broader picture, currencies, commodities, bonds, the whole lot.
Okay, let's jump right in then. So this is the core puzzle, isn't it? We've got these tariffs ramping up. 50% on Brazilian goods just announced, hints of more.
Yeah.
Yet the S&P 500 is hitting record highs. What's really going on? Are investors just brushing this off, or is there something else happening under the surface?
Well, that's exactly it. It's fascinating because the snapshot shows the S&P 500 actually climbed, plus 0.27% to a record 6,280.46.
Wow.
And U.S. yields, Treasury yields, they also nudged up a bit.
Which is really interesting because the report specifically mentions that even after the president announced that 50% Brazil tariff, the S&P and NASDAQ hit new highs.
Right.
It used that exact word, unfazed. And this is right after June, which was, pretty volatile with trade tensions and Iran stuff impacting energy.
Mm-hmm.
So how can markets seem so calm now?
Well, I think unfazed might be a bit too simple. It's not necessarily indifference. It could be investors making very specific calculations.
Okay.
Maybe they're betting on negotiations down the line, or perhaps they see these tariffs as like ring-fenced, affecting Brazil, maybe Canada, but not necessarily a huge immediate hit to global growth. It's more strategic risk assessment, perhaps.
Right. A calculated bet rather than just ignoring it.
Exactly. Which leads us to where the money's actually moving, because our sources talk about a notable rotation within U.S. stocks this month.
A rotation? How so?
Basically, stocks that didn't do so well in the first half of the year. They're now leading the gains.
Ah.
And the ones that were flying high before are, losing a bit of steam.
Okay. Now that is interesting. Because the report points out energy, which was one of the biggest losers in the S&P for the first 6 months,
Yeah. Wait.
is now the top performing sector in July. And communication services, which was the second best performer before.
Now it's the worst. Dead last in July so far.
So that really shows a shift.
It definitely suggests investors are maybe taking profits from those winners, the tech and communication stocks perhaps, and moving into sectors they think are, undervalued or have more room to run now.
Like consumer discretionary, that was up nearly 1%.
Yeah, consumer discretionary up plus 0.98%. Companies like Caesars, Norwegian Cruise Line, Tesla, they saw big jumps.
Okay.
Meanwhile, communication services was down almost 0.5%, dragging down names like Netflix and Take-Two. So it's a clear tactical shift.
And beyond sectors, there was other corporate news too, right? Tesla's shareholder meeting.
Right, Tesla set their meeting for November 6th. And Apple, they've apparently got big plans for new stuff in early 2026. A cheaper iPhone, new iPads, Macs.
Ambitious. But, not everyone's ignoring the tariffs on the corporate level.
No, absolutely not. And that's a crucial point. Conagra Brands, the food company.
Yeah.
They specifically pointed to higher costs because of U.S. tariffs as a reason. Their profit forecast for the fiscal year is below what Wall Street expected.
Ah, okay, so there's a direct hit. That Conagra example, it really complicates that unfazed narrative, doesn't it?
It does. It shows that even if the main indices look okay, individual companies are feeling the pinch, and their investors will too.
Definitely. And quickly, there was M&A news, too. Ferrero buying Kellogg's cereal business.
Yeah, WK Kellogg, for about $3.1 billion. Ferrero expanding their U.S. footprint, probably less affected by these immediate tariff announcements.
Right. Okay, so let's widen the lens a bit. What about outside the U.S.? How did Europe react, and what happened with commodities and currencies amid all this?
Well, Europe was kind of mixed, which reflects the uncertainty, I suppose.
Okay.
France's CAC 40 was up a bit, plus 0.30%, but Germany's DAX actually fell, menacing 0.38%. The UK's FTSE 100 did well, though, up plus 1.23%. So no single story there.
Fragmented. And commodities. Gold usually gets a boost from this kind of uncertainty, right? The safe haven thing.
It usually does, and it did tick up, but only modestly. Gold was up plus 0.25% to $3,321.64 an ounce.
Just 0.25%. That seems low.
It does. And the report suggests the reason was the strengthening U.S. dollar.
Oh, okay.
Normally, tariffs might push people to gold, but a stronger dollar makes gold more expensive for holders of other currencies, so it kind of uh, counteracted that effect, muted the rally.
Right, the dollar's strength acting as a headwind for gold. That makes sense. What about oil?
Oil prices went down. Brent crude futures fell net as 1.78%. WTI crude was down net as 2.05%.
Why was that?
Mostly those investor worries about tariffs hitting global economic growth. If growth slows, demand for oil could fall. Although, interestingly, OPEC Plus looks set to approve a pretty big output increase for September, but they're also hinting they might pause in October because, well, they might see global oil demand peaking soon. So lots going on with supply, too.
Okay. And currencies. We mentioned the dollar strength, but what about the direct impact of that Brazil tariff news?
Yeah, the dollar was generally stronger against the euro, the Swiss franc. But the big story was Brazil.
Predictably, I guess?
Oh, yeah. The Brazilian real just plunged. It dropped as much as negative 2.80% during the day. That's the biggest drop since early June.
Wow.
It did claw back a bit, but still closed down over 0.5%, negative 0.56%. So while the main currency markets were sort of stable, Brazil felt a very sharp, very specific hit. Shows how targeted these things can be sometimes.
Definitely highlights the direct impact. Okay, let's shift gears to fixed income. What were U.S. Treasury yields doing, and what are we hearing from the Fed and seeing in the labor market data?
So U.S. Treasury yield saw a small increase. The 10-year yield went up about 1.1 basis points to 4.351%.
Yeah.
Investors were reacting to economic data, like the labor market numbers, and still trying to figure out the potential inflationary pressure from these tariffs.
Right, and the labor market itself sounds a bit confusing based on the digest.
Yeah, it's a mixed bag. On one hand, initial jobless claims, new filings for unemployment actually dropped unexpectedly.
Which sounds good, right? Fewer layoffs.
Potentially. Suggests employers might be holding on to staff, but at the same time, continuing claims, people who've been unemployed for a while, they rose again.
Uh,
Yeah, they hit their highest level since November 2021.
so fewer people getting laid off, but those already out of work are staying out longer.
That seems to be the picture. It could point to maybe a softening in hiring, even if layoffs aren't spiking right now.
So what do Fed officials think about all this?
Well, the minutes from their June meeting showed they still think the labor market is, fundamentally solid. But many of them do expect it to soften gradually. And St. Louis Fed President Muslim actually commented that it might take quite a while, maybe till the end of this year or even into early 2026, to really get a handle on how these rising tariffs are affecting inflation.
So a lot of wait and see from the Fed on inflation impact. What does this mean for rate cuts? Are markets still expecting them soon?
Well, the futures market is pricing in a lower chance of a rate cut in July than they were last week.
Okay, so less likely this month.
Yeah. The betting now seems to be on September. That's seen as the most likely timing for the first cut, with about a 67.7% probability priced in. So markets still think cuts are coming by year end, just maybe pushed back slightly.
Okay. And quickly, Europe's bond markets.
They saw yields rise, too. Germany's 10-year bond yield was up about 2.9 basis points. Investors there seem cautious, kind of waiting to see how these U.S.-EU trade talks play out.
Right, the EU trade chief did sound optimistic about progress there.
Yeah, hinted a resolution might be close. So
Mhm.
that's another factor to watch.
Okay, this brings us neatly to another big tariff development mentioned in the digest, the new ones aimed at Canada. It's not just Brazil.
No, definitely not. The U.S. president announced a further escalation against Canada, a 35% tariff on Canadian goods starting August 1st,
35%. That's up from what?
up from an existing 25% general tariff, and it's separate from other specific levies already in place.
And what was the justification given this time?
The official letter cited two main things: concerns about Canada's role in the U.S. fentanyl crisis, and also Canada's own very high 400% tariffs on American dairy products.
400%. Wow, okay.
Yeah, but it's important to note this new 35% tariff apparently only applies to goods not covered by the USMCA trade agreement.
Ah, so USMCA goods remain tariff-free.
Right. And energy products are also staying at their existing 10% tariff rate, so there are carve-outs.
What really caught my eye, though, was the hint of more to come. The digest mentioned the president suggesting broader tariffs, maybe 15% or 20% on other countries,
Yeah, up from the current 10% baseline.
and specifically saying the EU would get a similar tariff letter soon. That sounds like a much bigger potential escalation.
It does. And, connecting this to the bigger picture, this Canadian move comes after some analysts were talking about the taco trade.
The what? Trip.
Taco Trump always chickens out. The idea was that he'd threaten big tariffs, but then always extend the deadlines to pressure partners into last-minute deals.
Right. I remember that theory.
So this new Canada tariff and the hints about the EU and others raises the question, is this a real shift away from that pattern or just, another negotiating tactic?
Hard to say.
It is, though notably the president did also say they'd reconsider the Canada tariffs if they see more cooperation on stopping fentanyl flows. So there's still that negotiation element seemingly built in.
Okay, wow. What a complex picture. It really feels like we've peeled back some layers today on how markets are processing these trade tensions.
Definitely.
But from those, surprisingly resilient stock indices, which hide that whole sector rotation story underneath,
Yeah, the internal churning.
to the very direct, sharp impact on something like the Brazilian real, and then these really specific, politically charged reasons behind the new Canadian tariffs. It's just a lot of interconnected pieces.
It really underscores how investors are constantly weighing different things, doesn't it? You've got the headline tariff news, but then you've got underlying economic data, corporate earnings, geopolitical strategy.
And sometimes they seem to brush off major news. Other times they react very sharply to specific details.
Exactly. It's rarely simple.
So for you, the listener, the next time you see those tariff headlines, maybe think beyond just the announcement. Consider that broader market reaction. Look for those sector shifts we talked about. Think about the stated reasons versus the potential underlying strategy.
Yeah, it's a good reminder that even when something looks straightforward on the surface, there's usually a lot more going on underneath if you dig a little.
Seeing those threads, as you said.
Precisely.
Well, thank you for your attention today. You can subscribe to our podcast if you like it.
See you next time.